Before talking about Intel, let's address the big elephant in the room right now, and that's the fact that Nvidia will join the Dow Jones Industrial Average, replacing rival chip maker Intel. Intel has been there for the past 25 years. Out with the old, in with the new type of move? Probably. But let's discuss Intel and why I believe Intel is on the path of one of the biggest comebacks ever. So currently, Intel has a market cap of just under $100 billion. On Friday, the stock was up 7.8% on better than feared Q3 numbers and also better outlook. Now, after hours, the stock did go down 1.8% because of that Nvidia news. Overall, this is basically the pricing metrics you're getting with Intel right now. If you just have a look at price to book in the last 12 months for Intel, that's at 1 time. And previously, when the stock was under $20 or so, it was under 1 at actually 0.7 times. Trading below book value, to me, never made much sense, basically pricing Intel for bankruptcy. And plenty of the comments under my videos were, oh, Intel is going to $10, Intel is worth $12. Yeah, okay, I guess you don't know how much the equipment cost, but that's fine. Anyways, this is the picture for Intel. I'll go over a couple of numbers from the earnings report and then focus more on what was mentioned by management during the call and in other interviews, and why, of course, I'm bullish on Intel for the long run. Still know the risk, but I'll explain all of that in this video. If you enjoyed this type of videos, leave a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so for those that missed the previous video, which will be in the top right corner by the way, this was basically the quarter, the beats and the misses. For Q4, beats across the board. For Q3, lots of misses here, but most of them are because of the charges, the impairment charges, restructuring and all of that has impacted those numbers. By the way, gross margin would have been closer to 41% if you exclude the charges. EPS would have been closer to 16 cents when the market analysts were expecting a loss of 3 cents. So yeah, Q3, they basically over-delivered, and I think they were also surprised by that. Plus, for the future, especially for Intel Foundry going into 2025, or probably for the second half of 2025, most of us expect, if you're bullish on Intel, you expect some tailwinds, especially also because TSMC is going to raise prices. So yeah, everyone that's using TSMC, if Intel can provide the goods and show that, look, we can compete with TSMC and we are not raising prices by 30%, then maybe that could attract potential future clients. But Intel still has, of course, a lot to prove. Now, right now, I do want to address this already right now. Right now, the expectations for growth, revenue growth for 25-26 sits at 1.3 and 1.7%. Management is not expecting those kind of growth year over year. They're actually expecting closer to 5%. So either they're sandbagging or analysts will have to revise on the way down. Now, in the earnings call, they made a couple of statements which I think are quite important. So here's the summary. Intel's 18A node, their 5th node in 4 years, is progressing well. Lead vehicles partner Lake and Clearwater Forest have met early milestones ahead of their 2025 launches. As Intel moves to nodes with a better cost structure like 18A and realizes savings from restructuring, Intel Foundry operating losses are expected to improve significantly in 2025. Intel is making significant progress on a plan to deliver $10 billion in cost reductions by 2025, ramping Panther Lake in 2026, which uses 18A and includes a higher mix of internally produced wafers, will help improve gross margins for the company and benefit the foundry business. That does not mean that they will not utilize someone like TSMC, just means that I think they said 70% or so will be in-house. Longer term, as Intel improves its product portfolio, both in foundry and products, this will command a better margin profile, though not meaningfully in 2025. And so, continuing here on a couple of comments that Pat mentioned. So, this was a good quarter on the progress that they had. 3 new customers, Amazon, which they obviously made a public statement about that, Panther Lake and Clearwater Forest internally, 2 new external customers added to that. So solid progress on it. Clearly next year there's not a lot of financial benefit from it because we're only ramping in late the year. Thus, we'll be given more qualitative metrics on the progress as we go. Basically, if there is a new big client, new big contract, stuff like that, those are the types of things that they will let us know. But all the things beneath that, we will not see and probably will not see anything up until 2026. Then talking about the foundry business, how big is this business going to be internally, externally? So they said the following. Overall, the external foundry business will be a modest portion, right, of the foundry business for the next couple of years. The foundry revenues will be dominated by the internal products as we've been building that portfolio for many years. So we ramp as we go through the rest of the decade. We set our financial objectives by the end of the decade are $15 billion plus of external foundry revenue. We'll be giving periodic updates, like I said before, on LDV, lifetime deal value of external foundry customers as we go forward. And indicators like we did this quarter of new design wins, new customers coming online. But the reported numbers for Intel Foundry will be substantially dominated by the Intel products for the next couple of years. That said, we saw a nice growth right quarter on quarter in the external foundry business, and we did break profitable for the advanced packaging portion of that business in Q3. So we are seeing nice growth characteristics, nice business characteristics, and we'll be giving more updates as we go forward. Okay, always good to hear. Now I do want to compare Intel to AMD just so we get a clearer picture here, revenue and operating margin. So revenue-wise, of course, we know in the last 3 years, Intel's revenue has basically come down while AMD's revenue has gone up quite a lot, although it has been staying flat for, well, the last 2 years or so. But what we can also see is operating margins for Intel continue to go down while Intel has seen a nice rebound since Q2 of 2023. As we look at data center and AI revenue for Intel and data center revenue for AMD, we can see that in Q3, AMD did surpass Intel for the first time. Yes, Intel had some growth quarter over quarter, so that's nice to see, but definitely the growth rates are much better at AMD than at Intel, especially when it comes to data center. If we look at the client side of things, we can see that since Q1 2023, AMD has grown revenue for that segment by 154%, while Intel has grown that segment by 27.1%, definitely losing some market share here, but you can clearly see the big difference between Intel and AMD revenue-wise, right? Intel just much bigger. So whenever they'll figure it out, right, they'll come out with their own products on 18A, which will become extremely competitive. That's when things get very interesting. Of course, 2025, talk is cheap. You have to execute. And I think in 2025, it's going to be a year where Intel management especially cannot screw up. They will have to communicate very well. And me personally, I'd like to see under-promise, over-deliver for the whole of 2025, because 2025 is probably going to be the most crucial year for Intel's business. Of course, all the restructuring right now, the impairment cost, the charges, all the changes that are making right now is going to position the company very well or much better, exiting 2024, going to 2025. But 2025 is when those leadership products, right, all those things that they've been working on for the last couple of years, they come into play and, well, you cannot screw it up. Then if you compare AMD, Nvidia, and Intel revenue in the last 12 months, of course, we can clearly see that Nvidia, its growth revenue-wise, revenue-wise, in Q3 2023, Intel was still generating more revenue than Nvidia. But of course, since then, Nvidia's revenue has basically more than doubled, while Intel's has been basically flat to up a little bit. As for AMD, it's now been flat since Q3 2022. Yeah, my question is, and this is not a dig at those investing in AMD, tremendous company, Lisa Su, tremendous leadership. But I've said this in the past as well. If you're not buying Intel because it's Intel and all the issues there, and you don't believe in the comeback story, fine. But my question then is, why not go with Nvidia? Why choose AMD? Because you think AMD is going to be the next Nvidia? Clearly, there is no such thing as the next Nvidia. I mean, maybe AMD might be the second best thing, but the second best thing is still far, far away from the first best thing, right? From the best thing. So yeah, that's just me. I'm with Intel, me personally, so of course I'm biased, but I can admit that Nvidia is a much better company. I can admit that AMD's leadership has been much, much better than Intel's as well. They've been executing flawlessly, or close to flawlessly, since Lisa Su took over 10 years ago, where the stock was around $3 or so, and now we're at $140. So yeah, they're definitely doing something good. But me personally, yes, I put my money on an Intel comeback story. Could have gone with Nvidia, of course. I had Nvidia previously, I sold too early. You already know the story about that. Stupid mistake. But yeah, that's just what I wanted to show. Nvidia, AMD, Intel, and then Intel versus AMD as well. 2025, big year for Intel. And of course also for AMD, because suddenly, well, they're going to get a big competitor back. I mean, still a competitor today, but they're going to be highly competitive on performance on product next year and the years after that. So as for the quarter, this was basically it, but of course, big impacts from all the restructuring and impairment charges. And I've seen one person say that the 18% gross margin here is because Intel was giving away its products for free. It's not the case at all. It got impacted because of those charges right here. Now, last couple of things here. One, for the CCG segment, it's nice to see that operating margin has also picked up a little bit, 37.1%. Of course, revenue is down $7.3 billion compared to 7.4. They say that they're on track to ship 100 million AI PCs in 2024 and 2025. And Panther Lake is going to launch in the second half of 2025 on Intel 18A. And that's going to be a huge, huge deal for the company. Then as for data center and AI, it's up quarter over quarter, plus operating margin is up as well, 10.4% here, plus $3.3 billion in revenue. They say here Xeon 6 increasingly competitive with launch of Granite Rapids on Intel 3 and Gaudi 3 launch and ramping in Q4. Now, Gaudi 2 was basically not really that successful. That also to do with the fact that the software just wasn't as good as it needed to be. As for the Intel Foundry, $4.4 billion in revenue, but $5.8 billion in operating losses. $3.1 billion of those came from the manufacturing asset impairment charges, so it would have been a loss of $2.7 billion. As for the outlook, it came in better than expected. Gross margin closing in on those 40%, 39.5% gross margin. Let's see if they can beat that and maybe go back to above 40%. But all in all, this was basically Intel choosing one good quarter and saying, okay, let's just put everything on this quarter, all the bad news, all the restructuring, all of those things. Let's get over with that. Of course, it's not over yet. I think we're still going to get hit a little bit in Q4, but you have to look at the underlying business. And I do think that we have bottomed. That's just my opinion. Of course, execution is key, launch of those products, etc., etc. But I think the worst is over for Intel. And again, if you're investing in Intel, you need some patience and believe that, yeah, this company can turn it around. Plus, they've invested, as Pat said, they've invested $30 billion already in manufacturing for the United States. And they are yet to get anything from the government from that CHIPS Act, which was announced 2 years ago. So I don't know why they're waiting so long to help these types of businesses, while on the other side of the world, Taiwan is getting a lot of help. So yeah, they'll have to figure it out. Of course, there are elections in the next couple of days. So hopefully things in 2025, or maybe even at the end of this year, can get resolved and Intel can build those things much, much quicker. As of right now, with the after hours action, we're going to be just above the 20-day moving average. RSI is low-ish, but yeah, let's try and stay above the 20-day moving average. We have been successfully doing so in the last couple of weeks, so maybe this might be forming a nice little bottom here. Of course, maybe on Monday there's going to be some selling pressure with the Dow Jones news, but overall, to me, Intel is basically betting on a successful turnaround story, betting on the fact that this company, in my eyes, as I've said before, is just too big to fail. It's not as garbage as some would like you to think, because, well, if you look at the stock price, then yeah, okay, this company who uses Intel anymore. But as I've shown you, revenue-wise, it's not that small of a company, right? Still generating more than double the revenue of AMD. And yet AMD is worth 2 times Intel today. So yeah, that's all I've got for you right now. Of course, do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.